Hello, everyone. Thank you for watching the presentation. I'm CEO of ENECHANGE, Yohei Kiguchi. This time, I'm going to talk about FY23 third quarter financial result. The key message is record high sales and profit growth. Finally reached London Bridge. Let's go through together. The first, we always start our historical stock price since IPO. The equity market itself is generally recovering, but like our share price and then other growth companies' share price is relatively behind the market trend, which we are aware of. The reason why I'm believing is the profit. The company needs to generate the profit, which is the major concern by the investors. So there used to be in 2021, let's say, when we doing climate tech, which was a fashionable thing at the time, in a company having a good sales growth, YOY is considered to be a great company, good market cap, share price, but which is not the case anymore, like under this current capital market situation. Even the company like us, we need to have the good quality sales growth, which coming with the good amount of gross profit and the actual operating profit. I want to make sure to investors that our management team, including myself, is fully aware of this importance of generating profit. Therefore, the rest of the presentation today, we're gonna give you the both sales and profit outlook of the company. The key message this time is a record high sales and profit growth. We finally reached London Bridge. In FY23 quarter 3, both sales and gross profit reached a record high of 1.83 billion JPY and 1.14 billion JPY respectively, both having more than 100% YOY growth. And also ordinary profit was still negative, but which has a record high increase from the previous quarter. And we expect our platform business and EV charging business having a very good outlook for the coming quarters. We also update the full year forecast of this year to 6.5 billion JPY, which is 74% YOY growth. And we expect to be profitable in the fourth quarter of this year. I'm happily and I'm proudly saying we have finally reached the London Bridge. Just quick note about the London Bridge is the metaphor of the time our EV charging business is the actual driver of generating revenue and profit. Why London Bridge? We use the London Bridge as a theme song for our EV charging commercials in Japan. We actually started this metaphor around springtime last year. And then when we started EV charging business, like we started investing a lot to establish a business from the scratch. And then at the same time, the Ukraine-Russia war just started. So our originally main and stable business, energy switching, was also undermined. So when we're driving EVs, like we are actually into the tunnel, saying like we are driving EVs in a tunnel, like there's actually a lot of uncertainties due to the war and global energy crisis. We were not sure how long the tunnel gonna last. And then that was a really hard time. So we're using the metaphor of a tunnel and then London Bridge nearly a year and a half. And then we get out from the tunnel, but the London Bridge is technically inside, but still miles away. So we're still driving and we can't really say when we can reach the point. We went through all the process over a year and a half. Then finally, we have reached London Bridge. I really hope that this presentation will be the good news to the investors. And then we're going to start a new series next year. The executive summary, we're not going to talk about this time as always. So please have a look later. Then the first chapter this time is we need to talk about the FY23 forecast revision. So FY23 forecast is revised upward to 6.5 billion JPY sales, which is 74% YOY growth. Investors might ask why. Okay, what's the driver behind it? It's mainly due to increased certainty of the EV charging business. When we announced this number, which is February this year, the EV charging business is not yet materialized as a number of sales and profit. We always had this number internally, but we are very conservatively putting the number out for the investors. So nothing really much changed. Like, everything is progress as planned, and then just reducing uncertainties day by day towards the end of this year. So that's why we are now gaining a little bit more confidence in the business. So we're just putting a number out. Slight bad news to the investor is we need to actually downgrade the profit target this year from 900 million JPY to 1.3 billion JPY. But again, this is not something very, very important news to investors, if understand correctly. So basically, EV charging business has been a little bit delayed due to government subsidy changes. So last year, government subsidy application was accepted or approved around September time. So all the EV charging installation needs to be done by the end of December, which was the last year's schedule, and which was also the same assumption we initially put at the beginning of this year. However, we talked about this last quarter call, but the government changed the subsidy schedule over this summer, and the government is now saying the application deadline, which was mid-September, and then we filed the application by mid-September, and the government is now currently saying the subsidy decision approval will be announced around late November to early December. So we actually unofficially informed the rough number. That's why we putting numbers out partially. But then we are not officially fully informed our subsidy allocation by the government. And then again, the government will announce in a few weeks' time. As soon as the government officially announces it to us, we can start installing charger. And then, which is virtually impossible to install all chargers by the end of this year if we are informed early December. So it's inevitably going to January and February. So therefore, it's not the bad news. It's just government changes, which was impossible to expect at the beginning of this year. And the government changed the schedule this summer. So we just now updating the result. But another important news to investors is the quarter 4 guidance. As we are in the middle of the quarter 4, technically as of today, which is in November, and then we have published the result up to quarter 3 and revised full year forecast, which basically means we have a very high visibility about the quarter 4 number, which is 2.5 billion JPY sales and positive profit. So we are expecting even further sales growth driven by both platform and EV charging. And we are finally back to positive, which will be the first time since we started our EV charging business and the war over Ukraine and Russia. So after 2022, this is our first time we are expected to be profitable by quarter time. So again, I just want to stress to investor again, we are delivering good sales growth and profit growth, which is something like a management team is highly valued. So let's quickly go through the numbers of the quarter 3. Our current progress is 60% of the full year forecast. So it means we are expecting to have a very good quarter 4 as well. And then up to quarter 3 number is, you can see we have 175% sales growth YOY. And then I'm very happy to show this number because all three business have grown significantly over the year. So the platform business was really dying this time of the last year in the middle of the energy crisis caused by the Ukraine-Russian war. All energy companies in Japan stopped acquiring new customers. And then none of the energy switching was happening at that time. And I was even saying to investors, to be honest, maybe 20% of the chance, there's a risk. Our platform business is not possible to recover the business if the energy market is completely broken, our government canceled the energy deregulation movements and everything like that. There's a risk. Maybe again, 20% of chance it could go that way. So I was really, really scared at the time, and then I was trying to communicate to investors as honest as possible. But still, I was saying to investors, we are working really hard, and this could be a good opportunity. The high energy price environment and the more complex energy tariff structure will potentially be a good opportunity for us to grow once again. And then we are probably achieving that way. So we are now nearly double the revenue from the bottom. We are very confident we are continue to grow in the coming quarters. And also EV charging. EV charging, we've been saying to investors, yeah, we are massively investing into EV charging. We're receiving orders, but no profit or no revenue coming in due to subsidy schedules, like we are nothing on the ground yet, kind of things. But now finally showing that we are actually realizing revenues and profit and putting the charger on the ground. And then this is just the beginning of our EV charging journey. So our number is going to be much, much bigger in coming months. And then finally, our data business is also growing. So all three businesses have grown very well YOY. And then not only that, the gross profit has also hit the record high with 131% YOY growth, which is great. Some of the company just managed to increase the YOY as sales, but not necessarily growing the gross profit. So obviously, gross profit is the first profit we want to have it. We want to have the gross profit growth, which is essential to be profitable as a company. So we are very happy to show the gross profit growth, which is again, like we hit the bottom in the same time last year, and we are successfully recovering from the bottom part. Don't worry about the margin part because our margin standard was very, very high, over like 80%. But now the EV charging business is including our hardware sales of our EV chargers, which cannot be 80% profit margin. Yeah, which has good margin, and I'm not gonna disclose that margins level, but the point is like below 80%. So more EV charging revenue coming in, the percentage gonna slightly go lower. But again, the point is, which has a margin. So that therefore the absolute number of gross profit is expecting to grow. And then let's talk about ordinary profit. Again, ordinary profit is still negative, but has grown significantly YOY and especially more Q on Q. Again, that's very important as well. We are controlling expenses, like hiring personnel and also kind of advertising as well. Next quarter, we are saying we're going to be positive. Very important. The current capital market environment is not friendly to a company who's losing money. So the company needs to be operationally profit. We haven't reached a point yet at the end of the quarter 3, but we are going to in quarter 4 and probably next year. I want to stress that we are very, very caring the profit level of the company. Then that's why like the SG&A is actually kind of first time is managed to reduce that SG&A Q on Q for a long time. We still hiring a lot of people. We still investing into the team management and advertising, but like not as aggressively as we are building up the team. So we have built the team which can deliver the good sales profit and sales growth and profit growth. So therefore, our expense is very much under control. So let's talk about individual business. First, as always, platform. So the platform business hit the record high revenue, the record high sales of 92% growth, and recurring revenue 59% growth. And our operating profit is 106% growth. Again, like, I'm very, very happy to show this number, considering like how difficult it was just a year ago, exactly the same time. If you look at the KPIs is also hitting record highs. The number of the users hit the record high, both household and corporate are growing well. ARPU is clearly bottomed out from the last year. And then we are on the way back to our kind of heydays, which was a little bit before the crisis. So I've been saying the energy market situation is getting better. And as you can see on the left chart, the JPEG, wholesale energy price in Japan, has much stabilized this year compared to last year. And then it's actually more importantly, the energy tariff structure in Japan has been changing dramatically to respond the energy crisis. Usually, like energy tariff in Japan was not linked to the fuel prices. Like, there's a bunch of like energy price caps. I mean, the same situation like as European countries as well. But there was an energy cap, which is the main reason why like energy company withdraw the businesses, because they cannot pass the cost on to the customers. They need to absorb when the energy prices became so high. So they couldn't really hedge the risk. But like basically government agreed, and also energy company also removed the price caps. So basically even the energy price is like still volatile and fluctuating, but energy company is less affected by the energy price. So basically it became more like resilient to the global energy price. So therefore, even like let's say recent war in Gaza causing bumpy energy prices internationally, and which eventually which is also affecting Japanese energy prices. But we don't even worry about that. We don't even worry about that. Like the normal energy company was screaming about that, because again, the price cap was removed, the tariff structure was all reshaped. So the energy company became much more stronger or resilient under this bumpy situation. And then, but it's good for us because like it's still like energy price is higher compared to pre-war level. And then also energy price became much more complicated because energy company removed the price cap, introducing variable tariff and a flat tariff, and like different bunch of new tariffs. For the consumer point of view, they need a professional advisory like us to choose and optimize energy types. So anyway, the energy switching market outlook became much positive, and we became much stronger as of today. On the right side, it's actually another important news to investors. The smart meter open data is finally happening in Japan, and it is one of the first country in the world at a large scale. Japan has nearly 80 million smart meter installed and actively sending data every day. So that huge database became now available to all sides of the public. So therefore, it will create a new opportunity for electricity data analysis. And then we became the first company to launch the service using the open access of smart meter data. Not everybody can do it, obviously. Like, we need to be authorized by the government to get access of smart meter data with the customer consent. So we became the first company, qualified company to do it. And then we launched a new service called ENECHANGE My Energy, which aimed to expand the number of users by providing personalized experiences by analyzing electricity data from smart meter. So we analyze the data on behalf of you and personalize and optimize the choosing energy tariffs for many, many years. The people's behavior, energy consumption pattern is actually keep changing, like due to the lifestyle, installing new, home appliances, or even, building like thing, like, the people's behavior, energy consumption is a lifestyle. The lifestyle is changing over the years. We will optimize the energy tariff by analyzing your own data, and we can now personalize the service for you. So this is a great additional value to customer. Why ENECHANGE is a good partner for you to work with. And then even like I give another example to you, that we provide the special plan. We're not gonna disclose it, like, how special or why special it is, because it's our very secret. But like, we're gonna provide a special My Energy plan to our customer who installed our EV charging. Let's say the hotel installed the EV charging, and let's say 5 EV chargers, and people coming in and charge it. The energy consumption pattern will be different before and after the EV charging installation. And then also that will be even changing further due to, like I said, more EVs on the road. So like in a higher usage rate, like, people will be like, energy consumption pattern will be changing. So, and that's one of the biggest concerns for the site host to install the EV chargers. And then we can talk to the hotel. Hey, don't worry, like, we are the EV charging expert. We are number one company in the EV charging, but we are also number one company in energy switching. And we are the only one company who's doing both and qualified by the government to have the smart meter data access. So we are the only one company in Japan to analyze smart meter data and optimize energy tariffs and EV charging speed and management, which will make ENECHANGE the only one choice for companies to use our energy switching and like EV charging, which makes the company even more stronger. So lastly, like, quickly talk about the market shares. So on the left side, the nationwide market share has been falling down. But then, as every time I'm talking to investors, the government data is lagged. So the latest data is from June this year. So it's almost half a year ago. And then it should be bottomed out around this time. So because we know energy company are restarting customer acquisition activities around this summer. So it should be like, this level on the left side chart should be around the bottom, and then probably next time, or even at least next time, should be like a bottom out and coming back to the growth trajectory. And then on the other hand, our market share has been jumping up, and it's now finally reaching to the 5%. And then again, which is great for us, because again, energy price is higher than before. Energy tariff is more complicated than before. So that's why the customer needs, especially a corporate customer, need expert advice like us to how to optimize, how to choose energy companies, energy tariffs, which is the best for you. Again, like, this number is before our launch of a My Energy service. So, we are not hitting a ceiling yet, nowhere near that. So we are very confident that number on our right side of our market share should be go up to 10%, 20%. I think like we can be reaching that level quicker than we thought. So our energy switching outlook is now it's actually really finally back to positive after nearly like a year and a half dark tunnel. since spring last year. All right, let's talk about EV charging. So again, EV charging has a big revenue growth and profit growth because we are finally installing a large number of charging stations on the ground, which is a trigger point to realize sales and profit. We have over 7,000 orders. As you can see on the right side, there's nowhere to put more pins, so we probably like think about like what's a better way to do it next time. One point is that the third quarter is a quarter we're not accepting new orders. So don't worry about the number of like 847 new orders. Yeah, it looks small, but again, you can see like that we took the order in the quarter two instead because we are saying, hey, we're gonna close the order at the end of June. We submit the order before June, and then some of the order which technically passed, slip into July, we're still technically accepting. So that's why we have some orders. But the point is, we don't really accept the new orders in the quarter three because government subsidy deadline doesn't work like that. So we need to have the order at the end of quarter two to submit the government subsidy application by the government deadline. So now in quarter four, October, we are now restarting a new order for 2024. The business environment update is also very positive. The number of the EV and PHV sales in Japan is stay high. It should be going up a little bit more faster, but like it's all right. It's all right. It will coming up. We had a Japan Motor Show last week, and then we are the only one EV charging company having a big booth and then presenting our service. Many car OEMs from Japan and international, including even China, like they're presenting a attractive new car lineup which will be on sale next year. So for the customer point of view, there are more attractive options of EVs coming up in coming years, which undoubtedly push up the number of the EV sales in coming quarters. So we don't really worry about that. EV shift is unreversible shift in the world. And then we had a discussion in European countries and in UK, let's say, we're gonna go like 100% EV by 2030 or 2035, or 80%. Yeah, we discussing like, is that 100 or 80 or something, the level. And in Japan, it's 3%. And the government is trying to be 20-ish% by 2030. So we're gonna get to that range. Like we're gonna maybe have a discussion either like about 100% or no, but we are nowhere near that. Like we are now 3 to 25, which most of the country have already achieved. Then the EV charging infrastructure has also a good news within this quarter. So the government revised the official target of EV charging infrastructure for 2030 in this September. Original target was 150,000 charger, which is changed to 300,000 charging by 2030, including the level 1 and level 2 charger, which is a home and a destination, like we call the normal charger, from 120,000 to 270,000, almost 2.5 times more than original target. So basically for us, our target market, like our accessible market of the EV charging, suddenly became 2.5 times larger than the previous quarter, which is great news, And then obviously we are expecting government support in many ways, subsidies or like deregulations kind of things. Government is very committed to achieve the target. So, and we work closely with them to help that. Then another big news to investors, and we became the #1 charging network of the destination in Japan. We are now officially #1 EV charging company in Japan. The second company after us, which basically we overtook the company, is the car OEMs. I'm not gonna disclose the name, but like that's a car OEM. So one of the large OEM in Japan has own charging network. So that was the largest network in Japan. But we finally overtook it. And then not only that, we installing more charger every month compared to other competitors. Our lead is gonna be much, much bigger coming months. Every quarter, we try to inform the actual number of chargers on the ground to investors and showing like how good our business is actually going. Again, because like order doesn't generate any revenue and profit. The actual inflation is the trigger point to generate the installation revenue and profit and actual utilization of EV charging, which is also generating additional revenue and recurring revenue and profit. So as you can see on the right side, so like in a bunch of Japanese logos, we have partnership with like very old major companies, major hotel chains, shopping centers, municipalities, like the travel companies. Again, we are officially number one in this field. The lastly, data business. Data business is going well. We have the good profit growth and operating profit growth. We maintain profitability in the business. And then the number of the users is also actually increasing, hitting record high, and the ARPU is slightly dropped and decreasing, but like that's actually okay. And then the beginning of this year, like when I put this forecast out, I was explaining that this year is really hard year for the data business because the energy company, all energy company had a huge loss last year, and then they cut the software budget this year. So we've been asked by all our clients, please help us to reduce the expenses, whatever like additional costs, like we need to postpone it, we need to cancel it. Like so that was a really hard year for us. So we need to be very, very slim operation to be profitable for this year. But the good news is like energy company regained profitability this year. So they're gonna have the bigger budget next year. So the data business is expected to grow bigger next year. So the data business has also very strategic importance of the business, like providing a very back-end support for our platform business and the EV charging business. The data business has a very strategic importance, but not only that, it has some underlying revenue growth and profit growth. So last part, quickly go to is the corporate part. So we recently moved to a new office in September, which is designed for remote first policy. And then, so even today, the on average old member come to office 1 day per week. And then even nearly a third of employees are not coming to office 1 day per week because they are considered to be full remote. And then our definition of full remote is people not living within like kind of commutable area to our office, which is we only have office in Tokyo and London. So basically people living countryside, they don't need to come to office once a week. If they come to office like once a month or once a quarter, the minimum days that employees come to office is only 4 days per year. We are very committed to maintain this policy for many, many years from now. Office is designed for that. It's actually the main Japanese company is now canceling remote working policy. And then they're asking all the employees back 5 days a week or at least 4 days a week. But we are not going that. And then we believe that our productivity is high or even higher to be hybrid or remote working policy, and which is gonna give us a better opportunity to hire more like-minded, fresh, innovative thinking, very high discipline people if we can carry on this policy. And then the last slide is I'm appointed to be a vice chairman of Keizai Doyukai, which is like the corporate executive associations. And then I'm the vice chair. The main chair is Mr. Kengaku, and he's a former executive of TEPCO. And then Mr. Hyodo, he's the CEO of Sumitomo Corporation. So very, very big guys. And I'm very, very honored to be sitting next to them. And then, so I'm actively working on the policy proposals to achieve the carbon neutrality in Japan and world. And then, obviously, we talk about our EV charging, or more EV general, or let's say energy switching, or like more broadly, like an energy market deregulation reform, energy market reforms. But not only that, like we talk about hydrogens, like all the renewables, everything, nuclear as well. I do my best to help change the carbon neutrality, which will eventually helping our company vision and goals. And we are the only one company as kind of startup to be sitting like all the executive chairs of energy committees in Japan. So thank you for listening to the presentation. Just quick reminder, key message is a record high sales and profit growth, and we finally reached London Bridge. I hope investor well understood the key message, and then I hope very excited to know us more. So if you want to have a private call with us, like please ask our IR team, and like I'm happy to have a call with you. Thank you so much for listening. Bye bye.